Good morning, traders. Welcome to this week's Elliott Wave Forex and Cryptocurrency Market Analysis webinar. I hope you all had a wonderful week. I had a fantastic week. It's always exciting when you see that what we're doing here week in, week out is actually playing out as we analyze. And if you look at last week's webinar and you go look at the charts, it's amazing the accuracy in which all this plays out. So I think if you want to do yourself a favor, please watch last week's video and go to your charts. Even before you watch this webinar, just check what we analyzed and and how the market has played out. It's really amazing how this has played out. All right, guys. So our course is starting tomorrow. That is the February course is starting tomorrow. That is the 4th of February. It's going to be running for the next 2 weeks. All right. So for those that are still interested to join us for the course, even if it's for the March course, my dates for March, I will confirm. I can actually confirm them now. Let's see. March is, I think it's going to be the 4th again. Yes, March starts again on the 4th. So if you're interested in the course, send me an email. You will get the detail of the course. So from the email, you will get the timing, you will get the course content, what is covered in the course, the timing of the course, and how everything works in the group. So the course starts at 1800 GMT, and we run for about 2.5 hours every day, Monday to Thursday, for the next 2 weeks. All right. So that is just for information for those that are joining us. But the maximum intake per course is only 20 delegates, because you don't want to have more than 20. So if you are interested, you want more detail, send me an email. All right. So a lot of questions that I get about the course is who can benefit for the course? Is it for beginners? What if you don't know anything about Forex? So the course is specifically made for experienced traders. If you are a beginner, you've never heard of Forex, is your first time just Googling about Forex and you come across this video, the course may not be for you. It is for experienced traders that have been trading for a while, maybe making profits but not consistent. So the course is made for that. So we've got members that have been trading for 10 years that have actually benefited from this course. All right. So it is mainly based on the Elliott Wave theory, so that is the focus, even though the first 2 days we focus mainly on the introduction and spend the second day doing Fibonacci, because if you do not understand Fibonacci, you cannot trade the Elliott Wave theory. There's a special relationship between Fibonacci and the Elliott Wave theory. Okay. So more information, send me an email, you'll get all the detail. All right. So if you've sent me an email before and you didn't get a response, please just resend it again. But I normally don't miss any email. If I did and you did not get a response, I may have just missed your email. Please just send. All right, guys, it looks like we have reached 5,000 subscribers on this channel. So it means people are getting benefit from this. They're liking this. So please hit that subscribe button and the like button if you want to get a notification whenever I post this on Facebook. Not Facebook, on YouTube. All right. So also, if you want to benefit properly from these webinars, you want to check under the description of this of each and every video. There are timestamps that links each and every pair that we're going to analyze here. So if you want a specific pair, you just click on that specific pair and it will take you straight to the analysis for that. So you don't have to toggle around, look for the chart that you're looking for. Some may even think that the chart they're looking for is not here. So if you just go here on the list, all the pairs that we're going to discuss, more than 40 pairs that we discuss during this webinar, they are all listed here. You can easily watch. So as I said in the beginning, if you want, please check out last week's video. You just come and click on any pair and compare to what happened with the charts. All right, guys. So it's really amazing. There is no better strategy than the Elliott Wave theory. I don't analyze using any other method. It is purely the Elliott Wave theory, and it is amazing, the accuracy. All right, so let's get started. As usual, we've changed slightly this year. We're not longer starting with the major pairs, although we're going to get to the major pairs and the rest of the pairs. We're going to start with the cryptocurrencies. I see there's a lot of interest in the cryptocurrencies because of the setup that they're actually making right now. So that's why I'm starting with the cryptocurrencies. All right. So let's get started with Bitcoin. All right, so I see some are requesting some other pairs. So if we do have time, we're going to do it, even if we can do it offline after the webinar, because I try to get this webinar under 1.5 hours, actually, preferably under 1 hour, 20 minutes. So if we've got time, we can still do those pairs that you guys are requesting now. Let's start with Bitcoin. I'm going to start again with the daily, so you can see where we're coming from. I'm only going to do the daily on Bitcoin, and the rest you can, on the other cryptocurrencies, we're going to go into the lower time frame. So this is still going according to what we analyzed previously. Let's just do this quickly. Let's start. Right. So we had the big impulsive move that started way back in 6 years back. That ended at the end of 2018. So that move pulled back in 3 waves like that, made a pullback in the same degree. So notice that I'm using yellow because it is the same degree. Now it makes a pullback in a different degree like this. This is now a 1, this is 1, 2, 3 waves there. And then we're looking for this one to come down here. We're going to come to this point here. Now, what is happening here is that we are expecting this move. So just remember, this move is, I'm supposed to be drawing this here. I just don't want to draw it skew, and we're going to be coming down here like this. From there, we're going to expect this move. Okay? From around this area, we're going to expect the rally again. Don't know if it's going to go in a straight line, because there's a possibility that this move that has happened here can actually be the same move that happens here again, and it goes like this and retests. Comes back here and then goes. But either way, we're going to be looking to benefit from this move initially back to these areas. So you know the market does not move in a straight line. So you may not just get this, which is that, and then this, which is a correction, and then this. It does not always happen like that. So you may not get it like that. So we are looking for this one to complete, this move to complete. You may get another one that comes and retests here, comes back down, and then goes. That will be an A, B, C running flat. It does not have to be a running flat. It can be any flat correction. Okay. It can even be more complex and go sideways for the next couple of months, years, before it rallies again. Okay. But for now, what are we looking to benefit from? Immediately, we're looking to benefit from the move to the from the upside move. So we are hoping that this will be an impulsive move. If it is not an impulsive move and it's corrective like this, you can see how long it's going to take for us to get back to those levels again, because it's going to keep pushing and correcting, the same way we took the whole year building this current corrective structure. Okay, so now this correction shift structure is quite simple now, because it's simple WXY move. We're looking for this Y, and then we're looking for this move to the upside. Whether it's going to be the impulsive one or the corrective one, we don't know. All we know that is we're looking for upside from around that area. Okay. Now let us go here and see what structure are we getting. Are we getting continuation to the downside? Are we getting now a reversal indication? Let's go to the 4 hour. 4 hour. Now, if we look at the 4 hour, so something very interesting on the 4 hour. It's really amazing what's going on here. All right, so this where we started with this year, 2019, first webinar. This is what we had. I showed you this structure. Okay, number 1, I said it's gonna drop. All right. Number 2, exactly the same structure. The following week, we made this structure. We said it's gonna drop. Okay. Last week, again, same structure. Said it's gonna drop. It drops. Now, for the 4th time, would you believe it? For the 3rd time, same structure, only that this one is currently not complete. It may push a little bit higher, but we're expecting the same thing. Look at this, 1, 2, let me do this with a different color. Look at this one here. Pull back in 1, 2, 3, drop. Pull back in 1, 2, 3, drop. Pull back in 1, 2, 3, drop. Fractals. Okay, again, 1, 2, 3. What do you expect to happen? We're expecting a drop again. So from here, when we started pulling back here, I said we're expecting to retest the low here. Okay, so these are fractals. This is patterns. They repeat themselves. Okay, so why is the Elliott wave theory so accurate? It's because we're dealing with patterns, and patterns means repeat. And if you've seen something else, something happened before, you can always almost predict what's going to happen next. Okay, so it's all about pattern recognition, understanding the patterns, understanding the characteristics of the patterns. Okay, so let's have a look. If we're going to get back to around the 3,100 area, from here, I'm expecting a bounce to come back and retest this level. Then this will be a complete corrective structure. Then we'll expect that last drop to the downside before we push higher. So simple as that. So you want, if you want to benefit from this move here, you want to wait for this to complete, the structure to complete here. You want to wait for this structure to complete. It's going to keep pushing lower. It may not get here, but if you get a pulsing move outside here and a corrective structure, you can look to enter here and go retest that level again. So that's how simple the crypto currencies are now, this Bitcoin. So you'll see that the other cryptocurrencies are similar. Let's go to Litecoin now. So Litecoin, if you look, same thing. So we started here with this one on Litecoin. This 1, 2, 3 corrective structure. When Bitcoin made its second corrective structure, this one made this one. I said it's going to drop. It didn't go drop, actually went sideways, made another corrective structure. It's just going sideways, it's not going anywhere. Now we are also looking at this one as a corrective structure, looking for this one to drop as well. So this will be the whole corrective structure that we'll look for, we will look for it to drop after completion. All right, that is Litecoin. Next one is Ethereum. So for Litecoin, you can also look at the previous videos to check what the long-term view is on those patterns. So here also we had this one here. Look for it to drop. We had this one here. Now we have this one here. Okay. So same thing. We're still expecting this one to drop a little bit more. We'll be looking for this one to come and retest here after all of this is completed. Okay. We've got a pattern that we like to call the V pattern. As I said previously, it is not a new pattern. We call it a V pattern for ease of recognition, but it is part of the Elliott wave structure. We've showed this during the course what the V pattern is. So it is not a new pattern. It is not a new discovery. It's just a different way of calling a structure that Elliott has discovered. So now we're looking for this one to drop here. It may come and retest the low here the same way Bitcoin is coming to retest this low here. Okay, if it tests and push and goes lower or breaks here, then it will give us a confirmation here like that. Then that means you are not going to have a retest. Same as Bitcoin. That means you'll not have a retest, but rather you're just going to go straight to those lows. Okay. All right. So that is Ethereum and Ripple. Now Ripple, now look at the structure that I'm talking about here. This retest of this low. Ripple has just done that. Ripple has just done that. I have been looking for, if you remember, actually, you don't have to take my word for it. Just go watch the previous webinars. We've been looking for Ripple to come and retest. It's actually not this low. This one is this is a short-term one. This is a short, lower degree one. I've been looking for Ripple to come and retest this one here. Okay, it is possible that it goes and retests there first before it comes down here. But I do not think that from here it's going to go retest here. I think it's just going to make a 3-wave pullback, comes back and retest this one. So this is the one that we're looking to be retested. Why am I looking for this one to be retested? And then this one will go up, same as Bitcoin, come down and then go. Let me show you in the higher degree what this is coming from. Let's look on the daily quickly. Brent says V pattern is equals to time to eat. Definitely, it's very accurate pattern. It's a very accurate pattern. So we understand the characteristics of a V pattern. So this is what we're looking at on Ripple. Okay, so it has not tagged the low that I'm looking at as yet. So Ripple, same as Bitcoin, rallied all the way up to those levels. Let me just bring the chart down so it can be clear. Right. Rally 2018, January, we started correcting with this move. So we started pulling back 3 waves. We started pulling back 3 waves. That makes an X. Let me switch off here. And I need to draw it cleanly. Not like a kindergarten kid. Right? Correction. Here, you're looking for this pattern to happen here. Okay, and it's not just about fractals. It has to go with the sequence. The whole sequence must be there. So if you have seen this pattern go up and down, what are you expecting? You're expecting a move up. So you've seen this up and then it's coming down. What do you expect? You're expecting a move to the upside. So we want this to retest the low here, go up, come back down for the last one, and then we're gonna then look for this to go with that move again. All right. So what does this mean? What is it? Are we just looking for patterns that are similar? It means absolutely nothing. It must be part of the sequence. What is the sequence? The sequence is a W, it's a X, it's a Y, it's a X, it's a Z. That's what we're looking for. So we can already forecast 2 moves ahead here that are left, up and down. So we're still looking for this one to come and retest the low here, bounce up before it comes down. Okay, so everything is clearly defined. So if I've drawn anything below 0 here, that's not the intention. It's not supposed to go below 0. Okay, it's not supposed to go below 0. We don't expect it to go below 0. Let me draw it clearly before I start getting messages from some of you guys that are very strict. All right, so this is what we're looking for. As close as possible. We don't know how far, but we're gonna get an indication. We're gonna get an indication like that. W, X, Y, X, Z, and then we look for this to bounce up. So immediately, what are we looking for the immediate term? We're looking for this one to break out. You can take advantage of this, and then we'll look for this to come back down again before it goes. Nice thing about this, when it comes down, you're gonna get divergence. This one is gonna make a new low, and then you should get a divergence to show that you're gonna reverse. All right, very clear, cryptocurrencies. Okay. Beautiful. Now let's look at the indices. It's amazing how the indices are playing out. Let's have a look now. S&P 500. Okay. Now this is not a bragging session, but you have to see the accuracy of this and how we call this before it happens. I have been calling for this one to go push higher even when we were still coming down here. Okay, I was simply looking for it to come and retest this low here and push higher. Okay, if you watch last year's videos, you will also see that this has been forecasted exactly as it has played out. Now, what do we have here? I said it's an expanding flat here. We're looking for an expanding flat, and we're looking for this to push up higher for one last wave to the upside. Why did we look for that to push up higher? As I said, you are only seeing the front end of a very detailed analysis, which is what we don't do here during the Sunday webinars. We do this in the group. So let's show you here why we're looking at it like that. We're still looking. So excuse the clutter here. I should have made sure that this is not showing in this degree. I think I can do that now. Let's not show it in the, yeah, I don't want to show it in the month and the weekly. It should show in the lower degree. Okay, let's do that. Avoid the clutter so you can see clearly. Let's do this quickly. I don't want it to show in the weekly. Yeah. Right, a little bit better. Right, now this is what you have. We're looking for this one here. You may have a different view or a different count, but this is my count, and I've been accurate for as long as I've been running these webinars here. So this is my view. You can have a different view, that's okay, but this is my view, and I'm looking for this one to break the previous high. Okay, so we can focus and we can measure what the length of wave 5 should be. So we'll look to see how far this goes. So this is the reason why Okay, 1, 2, 3, we're looking for 4. Internally here, you've got again 1, 2, 3, 4, 5. So this sequence is incomplete until we get that wave 5. So this is the part that you don't. So this is why I was only looking at this to be a corrective structure, push higher. So as we said, if you get any corrective structure along the wave here, you keep buying them for upside. This is very simple. There's nothing simpler than this. You know, most of the time I'm always showing you the complex corrective structures, but this one is simple: 1, 2, 3, 4, 5. Anybody who's just attempting to learn the Elliott Wave theory, if they come here, you should be able to identify this structure like this. Simple. This is the simplest. Okay. 1, 2, 3, 4, 5 is the simplest. All right, so that's what we're looking for. Let's go back now to the 4 hour, see what's going on there. Right, now this is what we're looking for. We corrected last week, we were in this correction, we corrected and we push higher. You're correcting again, expect to push higher. So you keep pushing higher. At some point, you're going to get a deeper correction and push higher. Okay, simple. That's the S&P 500. You will get a correction. So when you get a correction, it does not mean it's reversal. It's just a pullback. Okay. This line was drawn last year. Haven't removed it in the videos since. So that's what you're expecting. We're looking for this one, 1, 2, 3, and then up. Now let's look at the NASDAQ. It's a clean one here. Let's look at the NASDAQ now. So the NASDAQ, interesting thing about the NASDAQ is that there's no, let's just show the NASDAQ quickly. The NASDAQ is simple. You have a corrective structure here in the middle of this correction. You've got this pullback, 3 waves, pullback, and then a move. Very clear corrective structure. From there, you push up in 5 waves. So at some point here, even though this one may push up 1 again, you're going to get a deeper corrective structure. Okay? Does not have to be deep, it can be sideways and then push higher. We're looking for this to break the previous highs as well. Similar, same as the S&P 500. Okay, so very simple. We have now, if you're looking for, if you trade trend lines, you can see that we're out of this structure now, and then we're looking for this to push higher. Okay, we corrected above the trend line, and then we're looking to push higher. Easy. That's the NASDAQ, the Dow, similar. Dow is exactly the same as the S&P 500. Now, if you look at the Dow, same structure, pullback, 1, 2, 3, expanding flat. Now we're pushing higher. Let's push up in 5 waves. So this can go sideways, can make a deeper correction before we push to the upside. Okay, so you may go sideways for the next couple of days. Let's see. Let's see. But any corrective structure is an opportunity for upside. We're not looking for downside as yet. Okay. So this is how much you would have benefited if you watch and trade what we discuss here. So that is the Dow. Now let's look at the UK 100. The UK 100 on the 4 hour. Last week we were in this corrective structure. We're making this corrective structure and we're expecting it to push higher. Okay, so it did not just push up higher. It made a 1, it made a 2, a 3. So it made a deeper, a bigger corrective structure. Now we're pushing higher. Corrective structure here, you need to push higher. Okay, so a corrective structure, we need to push higher. And if you look at this one here, let's switch off all these lines. So if you look at this one, it looks like this structure to the downside, we are getting out of. Please remember, we don't trade trend lines. I'm just showing what the only thing I use trend lines for is to channel the structures. I'm not drawing it cleanly. I need to draw a clean trend line. Need to draw a clean trend line. It's supposed to be like this. Okay, so we're actually getting out of this corrective structure here. We look to push higher. Okay, this structure is complete. I must actually draw this one like this. The correct way to draw this one will be if you draw it like this here. Okay. Let's do this. Select, see if we can extend. Yes, better. So this will be your channel. This will be your channel. And you've already made a corrective structure on this channel. So we have broken out already. So it's confirmation that we're going out. Lower degree correction in the 4 hour. You can look to trade this one to the upside, at least for a 1, 2, 3 up to this level. Let me show that in a different color. At least for a 1, 2, 3. 1, 2, 3 up to that level. After which you will expect a deeper correction if it's going in 3 waves. Okay, so it's going to keep going like that. That is the UK 100 or the FTSE. Right, the Nikkei also a beautiful chart, especially the current correction. Let's have a look here now. Nikkei. Now, if you look at the Nikkei, beautiful textbook stuff. Textbook stuff on the Nikkei. After the move to the upside, again, this is the front end of a very detailed analysis that gets us here. So now we're just going to look at this piece here. We're pulling back here in 3 waves. Let's switch off here. We've pulled back in 3 waves. We're correcting in 3 waves. We come down in 3 waves. Now, if you look at the lower degree, it fits snugly into the higher degree. 1, 2, 3. 1, 2, 3. 1, 2, 3. What do you expect? You expect that this corrective structure is complete and you are going to push to the upside. This is what happens when you understand the structure. So these strong downwards moves don't scare you, and you'll find that when this is coming down like this, market analysts will be hyping this up, saying the market is crashing, and everybody gets excited. Everybody wants to sell, and then when you sell, this is what happens to you. Now, what is happening in the immediate term? Let's have a look. In the short term, we've made this corrective structure. We're making another one here. You can look at it in the 1 hour. We're looking to push higher. Okay. Right. Great stuff. So we're pushing higher. The Nikkei. Beautiful structure there. DAX. Let's have a look at the DAX. DAX. Same. This structure to the downside looks to have been complete, and we reversed in this move. Corrective structure here, look to push higher. We are already out of this channel. If you look at the DAX, we actually projected the blue box that it's going to reverse there. That's even if it pushed out of the blue box slightly, that's okay. We are now looking for this to reverse. So this is pushing up higher. It may do this. We may get a deeper corrective structure at some point here before we push higher. Right, Nifty. Let's look at the Nifty. Nifty, it's actually very, very nice chart. Go watch if you want to see how accurate this is. Also, you need to watch last week's video. This is where we were on the Nifty last week, exactly here. Okay, let's switch off and cut. Let me see if we can cut this. It doesn't want to activate. I don't want to reset the whole thing now. It's going to take too long. Right, but this way we were on the Nifty last week. And I said, if you look at this structure here, you've got downside here, pulsing move. You've got a corrective move. So I said, expect this to come down here. This move has happened. And I said, expect this one to go up like that. If you go and watch that video, you will see that this is exactly as analyzed. These 2 moves down and then move to the upside. Even though this one is not complete yet, you are only here. So you're expecting this to correct here to come and complete this move. So this yellow move on its own is a structure. Now, if you look at that, you've got another yellow move here like this. It's a structure on its own. you've got another yellow move. Here's a structure on its own, WXY. Simple. That's why we could focus down, we could focus up. Now, what are you looking for? You'll see if we're gonna get a corrective structure that will take us up, like the other cryptos, for a Z or for a higher degree. So let's look, labeling on this. This is what it looks like. It's your red degree, correction, and your red degree. Simple. Simple. All right. That is the Nifty and the Sun Pharmaceutical stock that I do for my Indian traders. There's nothing special about this stock. I just do it because I've been doing it for the past 2 years. Now, for the past year, we have been selling. We started with a buy here. We started with this buy setup here. So for my Indian traders in the group that are interested in this stock, we started with a buy here, all the way up to this level and started pulling back. Okay, we're expecting this to go all the way, but instead what we didn't see was that this was actually making a corrective structure for downside. So when we saw this and it started coming down, started selling all these corrective structures. Every week it is set up. All these are weekly corrections. Every week when we get here, we find this, and you just tell the guys to sell, 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 sell. Now we've made a pulsing move in the opposite direction for the first time, and we're getting this corrective structure. So let's go down lower, make it clear. You've got a pulse, you've got a correction. So that corrective structure may not be complete. So you have got this pulsing move here, you've got a pulse here, you've got a corrective structure. Let me do it in detail. So this is what you need to look at. 1, 1, 2, 3 back, 1, 2, 3 up. You can get 1, 2, 3 back. Makes this a corrective structure. It will be now complete. Then you can look to trade this one to the upside at least. Okay. So that upside, you need to be careful also because that may just be a 3-wave pullback that can drop like that. But for now, take advantage of this break to the upside. Okay. That's how simple that is. Right, now let's get to the majors. Let's go to the major pairs. Euro, US dollar, and the DXY. Amazing, amazing how this is playing out. Took me only half an hour to prepare for this webinar because everything that we have analyzed last week has almost everything has played out. So let's look at this in the daily again. Now I need to take you through what we have been doing since the year started on this pair. Now, when the year started, we were here, we had this pullback here. So what we didn't have was this corrective structure. I said, you're gonna get it, you got it. You're gonna push down, you push down. And I said, you're gonna reverse at the lower boundary here. At the time, the boundary was here. So I said, you're gonna reverse here, and you're gonna go retest the top. Now, this is 1, 2, 3, 4, 5 moves. Forecasted. You can only do that with the Elliott Wave theory. Let's go to the lower degree and show you exactly what that looked like. Why were we looking for it to be like that? We were looking for it to be like that because I said this corrective structure that is currently happening on Euro US dollar is correcting the whole move that ended. Let's just show here quickly. I'll show the move. Let's just get to load. So this structure is supposed to be correcting this whole move. Now this structure, it cannot be that we have a structure this size. It needs to be big. It needs to be big if it's going to carry on to the downside. Because we've made a pulsing move, so we need to correct the whole thing. Either it goes sideways or it pulls back deeply, whichever one. But we need the degree or the size needs to be relative to the structure, to the swing. Now that is why when the year started, this is what this chart looked like. We didn't even have this yet. This had not built, but we expected that you're gonna build this. So if you go to the 14th of January, you'll see that this was a 1, 2, 3 pullback, and we wanted this correction. This is where we took the trade all the way to the downside. I exited here, and I was looking. I actually took a trade here, which I lost. That's fine because it made this move. Okay, now it made this pulsing move, and then I took another trade here. Okay, now what am I looking for? I'm looking for this to come and retest the top here. Easy as that. Easy as that. Lost 2%, made 4% here. Easy. All right, so this is how you trade. Now you're looking for this one to come and retest the top here. Now, what is this structure? What are we looking at this structure to become? Easy. Okay, it's easy when I do it. Right, so we're looking for this to do this. 1, all of this corrective structure, 2, 3. So this whole thing is a corrective structure, 1, 2, 3. Now we're looking for these to go and complete. If you go look at the Nifty, what I've just done on the Nifty, go back, rewind to the Nifty, you'll see that the Nifty was doing exactly this structure, that last yellow piece that I showed on the Nifty, and I'm looking for this one to complete. Okay, so last week I also said watch out for the cross pairs, and they're all pushing up higher and they've confirmed. We're going to go to the cross pairs if you watch, and I hope you benefited from them. You'll see that they've all done as expected. Now we're looking for this one to push a little bit higher. It is to come and retest or break this high here. So that will be a 1, 2, 3. So if this is going to be a deeper structure, we're going to expect a deeper corrective structure that will give us another 3-way move to the upside. Okay, so that's what we're going to expect. We're going to expect more from this, because remember what we want. We want a structure that corrects the whole move from the top. So we want something like this, but it has to be a clearly defined structure. Right, let's get an exit here. Now the DXY is exactly the okay. Before we go to the DXY, let's just look at this in the short term. So in the short term, you want this structure. You can see there's a pullback here. There's a pulsing move here. There's a possibility that this comes and retests here, go back up here, makes this structure. So basically, you can have a corrective structure here that will take you all the way up here once complete. So unfortunately, you have to be patient and see how this one builds. There's a number of ways that this one can build up. If I just move this one slightly off, so I can show you another alternative. So another alternative here will be if this one makes this pullback here. We've made a move here. This can actually correct from here, go retest the top, comes back down here. You will see that it is going to be making a corrective structure either way. Can you see? Right? There's a slight difference in the way the correction can play out. That's okay. Okay? So that's okay. It's just option number 1, option number 2. Either way, it's a structure that Elliott has identified and the bias is the same. Very easy. All right. Alternatively, it can even do this 1, 2, 3 here. Do that. Just to show you that this can play out in a number of ways, but it does not change anything about your trading. This one pulls back, comes back up here, comes back down, makes this, makes like a zigzag, and then you get this structure. Can you see? 3 alternatives, nothing wrong with any of them. Doesn't mean that one is better than the other. It's just that we afford one the highest probability. But in this case, it doesn't matter because we're only going to trade when this is complete. When this is complete, when this is complete. Easy. So you see, whichever way it plays out, it does not matter. Okay, that's euro. Look out for this to build. Any of those 3 that I've shown you. Right, so that's euro US dollar. Let's go to the CAD. The CAD is playing amazingly well. CAD is playing amazingly well. I have to keep referring you to this idea that I left you with last year before we closed. Need to. So this is how CAD is playing out now. If we look here, where are my ideas? My ideas are not loading. I don't know what's going on here. This is strange. Okay, it's loading now. So this was December the 5th. 5 December. Let's load. Just want to load this one here quickly. Doesn't want to come up. Okay, guys, I don't know what's going on here, but you can go watch, see it on my trading view profile. I don't know what's going on here with my trading view. Maybe let me reset everything here. Okay, should be okay now. So let's look at that idea now, see if it's gonna pop up. So this is the idea we sent last year. We're back live again. So this, if you look at this here, this was not only posted because it was about to play out here. If you watched videos last year, I have been expecting this year. We have been looking for this one to build. We looked for this one to build. Even before this one built up here, we expected this to come into the blue box. We traded this blue box to the upside. Okay? Traded this blue box to the downside. 1, 2, 3 down, completed, and then this moved to the upside, and then now we're looking for the big move to the downside. So we could see, can you see the difference here between these two moves? Corrective, corrective, takes forever to play out. Corrective, corrective, takes forever to play out. Now the moves that we are interested in are these big moves. These are the moves that don't come often. Like I said, the market trends 70 to 80% of the time. See, this is not trends. The market corrects 70 to 8% of the 80% of the time, and then it only trends about 20%. Now, this is the trend. This is the 20%, and this is what we wait for. What did I put? This is the stuff that we wait for, these big moves, the one that's playing out now. Okay, so this is what we're looking for. Playing out, push higher, but it pushed beyond the blue box, so we located our Z here. Let's play this out. I expected this to only get up to this level, but that's still okay. It's still returned the 1,618. Now we had this big move from 137 down here up to 133. That's over 400 pips down. Corrected in this year, and we looked for this correction. Those who trade trend lines, I did tell you that this one looks like, if you trade trend lines, you'll find this one looks like it's a retest. The same thing here when this was happening here. I said, look at this as a retest if that is your strategy. Now you're looking for this one to come down. Another opportunity here. Now, every time we get something like that, you're going to keep selling that. Why were we looking at this to do this? It was because we looked at this fractals here. Let me switch off. This structure is exactly identical to this structure. So we expected that that structure would play out like that. So we looked at this as a 1, as a 2, as a 3, W, X. Let me do it properly. 1, 2, 3, 4, 5. W, X, Y, X, Z. Look what happened. Exactly the same. It drops, gives you that deep corrective structure. It comes down, gives you another one. Expect another one here as well. Then from there, every small one, you keep selling. You keep selling. So at some point, you're going to get this one. You're going to get this one here. So same thing here. You drop, you get a corrective structure. It's dropping. You're going to keep getting small ones now. Keep getting small ones up until here. Okay. This one was also doing the same 1, 2, 3, 4, 5. And we're not doing this in hindsight. When this was playing out, even from here, when this structure was starting to play out, we're already looking for it to make the exact same structure, WX, Y, X, Z. Now, what did I say in the beginning? When we were looking at the structure for Bitcoin, I said it does not matter if this is the same as that. There must be a relationship between them. And what is the relationship? Now, you're going to learn something here for free. This is the relationship. You've got a 3-wave move here. You've got a 5-wave corrective structure, and you're looking for another one. Either this can do that or give you another big one. But essentially, you're looking for this one to happen again. Okay, very easy, very easy. And if you were to label this, you're going to get 1, 2, 3, W, 1, 2, 3, 4, 5, which is an X, and then you're going to look for another move to the downside. Okay. So that is the structure that we're looking at. Keep selling this. Simple. Let's go for the rest. I think I've spent a lot of time here. Let's go US dollar CHF. US dollar CHF. You should have all benefited from this. Let's go 4 hour. Correction here. We called this pullback, called this push up. Actually, this push up, beginning of the year, this was the correction, said buy from here, and then you're getting another corrective structure. Now, because you're looking for euro up here, it can do this here. It can, this will be the pullback. So it will be making this corrective structure in the meantime. Okay, so only when this completes, you can look to take a trade up, look to retest the previous high. Easy. US dollar CHF, pound US dollar. So pound US dollar, we are still looking for this structure to complete here. So we've made a move up, corrective structure down. Now we're looking for this one to come break the top here. Are we going to break the top? Let's look at this here. Are we getting a continuation structure here? We're going to push up higher. Let's have a look. Let's go 4 hour and look at this structure, 4 hour. We are making a corrective structure. Okay, so that corrective structure, let's go look at it in detail. That corrective structure is this one here. So we are not going down yet on the pound, 1, 2. This can do this here. So which can be, let's do this. 1, 2, 3, 1, 2, 3, 1, 2, 3. You can get one more down, complete this structure, and push higher. Okay, so we've got a strategy that we use to confirm a complete correction. So sometimes it can be premature, you can get in prematurely, but if we've don't have that strategy added to the theory, it makes it very difficult. You can have what you call false breakout. We don't have what we call false breakout. That's eliminated. Okay, so that's what we're looking at here. Right. That's pound US dollar. US dollar ZAR. Before we go US dollar ZAR, let's go Audi US dollar. Audi US dollar, last week showed you how this structure needs to pull back like that, and we have now pushed up higher in this move. What's happening now is you're getting another corrective structure here. Wait for it to complete for one more up. Easy. Okay, you need to watch last week. I can't repeat that. It's just going to be a waste of video time. You just need to go and click on Audi US dollar for detailed analysis on this. We expected this to pull back here and then push higher. Now you're getting another correction. It is in, it is very premature, so you need to wait for it to complete. We're still looking for continuation to the upside. That is Audi US dollar. New Zealand will be the same as well. So in New Zealand, this is going to still go sideways. This does not mean anything as yet. We're still expecting, actually, let's have a look here at something here. If we're not going to have a deeper pullback. Okay, got an ABC move there. So it's a possibility that this one here can make one more up. Okay, 1, 2, 3, 4, 5. No, you should get a pullback here now, a corrective structure. You should get a corrective structure here on the New Zealand. Go sideways or a pullback. Right, US dollar ZAR. Possible expanding flat right on the top there, Brent, rightly so. Right, so US dollar ZAR, go to the daily. Nothing has changed. As far as the analysis is concerned, we've looked at this. We've looked at this as a running flat there. Let me do this again. 1 running flat there. 2, 3. 3. Now this pullback that we're calling an X. Now we've got 1, we've got 2, we've got 3. Is this all a correction, WX? Or is this going to still make another one like this in the higher degree that makes it a Y? Okay, so we need to see what, if we're going to get a corrective structure or an impulse. If you get an impulse, that means this is complete and you're not going to get this. But I don't expect the impulse here because US dollar ZAR, for some reason or another, there's a correlation between it and US dollar CAD. So when US dollar CAD comes down, US dollar ZAR goes down as well. So there's a relationship between the two. So I don't expect this reversal yet. I'm expecting US dollars, the South African rand to be continue the strength against the US dollars. Okay, I think last year I forecasted that we're gonna get to the 13 area when we were still building this year. Okay, so let's see what happens in the 13 area. All right, so that's US dollar ZAR. I think we can now move on to the yen pairs. Yen pairs, pound yen, capitulated move here, impulse, you're building this structure. You're waiting for this structure to push higher. If you go to the 4 hour, it looks like that has already happened now. Let's go to the 4 hour. Watch previous videos for a higher degree analysis on this one. See here, you've made a 3-wave pullback. It's a very interesting pullback, 3-wave here, because the X is quite small compared to the other 3 waves. 1, 2, 3. And now you've made this pullback. Correction in the 1 hour. This is a beautiful trade to the upside. Okay, if you get a corrective structure here on the 1 hour, this is a beautiful trade for more upside. Okay, we're still looking for this to go to 156. I'll show you just now. So if you get an entry point here, you can actually get on the ride on this one and just hold it all the way down up to 156. So this is why we're looking for 156. We're looking for this to go and retest the previous high. And that's going to take time. It's not going to happen in one go. We're looking for this to be retested. But before that happens, this one can push up higher. You're going to need to get a deeper correction at some point. But if it's you're getting this deeper correction and you entered here, you should be safe. Okay. All right. That's pound yen, pound JPY. Now, this is interesting. Last week, I did pound JPY and AUD. Let's recap what we did last week. You have to see this. You have to see this. Okay, I'm gonna bring pound AUD. This is exactly what I showed last week, and this is why this is so amazing. Let's look at what happened. I did US dollar JPY together with pound, not pound. US dollar JPY, I did it together with AUDJPY. Who remembers? Anybody remembers what we did here last week on US dollar yen and AUD yen? Beautiful, Harry. Now, this is what I showed you last week. This is where US dollar JPY was last week, here. It was here. And this is where AUD yen was last week. So that means, let's now do this. Maybe it will work this time. My replay button, there we go. Now it's working. That means if we cut it here, can we cut it? Doesn't want to cut. Okay, no, it's fine. But anyway, we were here and we were here. As you can see, the two vertical lines showing you where you were last week. Now, I said AUDJPY has already made a corrective structure after making this move. But US dollar JPY had not yet. Now, what happened in the week was that US dollar JPY went and made this structure as we had expected. This was the analysis last week. We expected it to come and make this structure. Now, trend line traders would have looked at this as a break to the downside and started selling this. But we see this as a correction because we know when what the impulse is, what the correction is, and when it should come. See, so now what do you have? You've got a pullback to the upside. So you got this one here, which you should have entered here. And if you didn't, you're going to get another one here, entry point here. Look for it in the 1 hour. and then expect to get a similar move that you got on AUDJPY after this pullback. Okay, so this is how amazing this is. We're just looking at patterns. See, I did not even label anything, but I'm just showing you patterns. Now, this pattern was lagging this one. You could just trade USDJPY just by looking at AUD yen. Simple as that. All right, so now I've just essentially done analysis on both of them. I expect continuation on USDJPY from here. Expect AUDJPY to also continue from there. Even though it's not going up aggressively, expect continuation there. All right. So you can get here something like this before it pushes higher. So any corrective structure you can get, it can be expanding, running, whichever one, doesn't matter. When it's complete, you will know. Right, so let's go back to one single chart. That's AUDJPY and USDJPY. EURJPY. EURJPY, we were here last week. It was here. Said expect corrective structure for a push higher. So that corrective structure did not just go sideways, it made a three-wave pullback, which is okay. That's what you expect of a corrective structure anyway. Because just because I put in a flag like this does not mean that it's just going to go sideways. It can be something like this, it can be something like that. Okay. So now you got this clear corrective structure, you got this move. Similar to the NIFTY structure, go and have a look at it. You have one, you've got two. I'm expecting this one to complete here. Okay. At least. That's EURJPY. Now, CHFJPY, we talked about this forever. Now, this is what the discussion, the analysis was last week. A pullback, a three-wave, a regular flat in the middle. I said expect this last pullback. Okay? I said expect this pullback. Right? You got the pullback. This was last week. We were right here on the top. This could have gone here, from here, if this was all a correction. But we got this pullback, which is what we want, and now you've got to move to the upside. Now expect a corrective structure. Even if you have to, if you're looking for a trade here, you don't need to get too excited because there may be another structure forming, which I'll show you just now. So we're expecting a corrective structure here. If you get it, take the trade, hold it. Because this will be something like this. The structure will be complete. Beautiful corrective structure. But there has to be a but and the caution here. Because this structure can do this. See here, we've got 1, 2, and this one can be the 3. The 3 can be this one. It can be this one here before it goes. So which means you can get one more down before it goes. So you just need to be careful. You just need to put that in the back of your mind that when you take this trade, there is that possibility that this can do that before it goes. Okay, so this is a beautiful, beautiful structure. So CHFJPY, we've been very spot on with it, and this is how it looks now. So a corrective structure here, you should be going here. So the other members in the group, like Harry, I think they took it here because you can understand, they can understand the structure. Okay, beautiful, beautiful. So watch and see how we look at the charts. So, but you need to understand the whole sequence to understand what we do. That's CHFJPY. Audi we did New Zealand. Let's have a look. New Zealand. So New Zealand has already made these corrective structures. So remember the one that we just showed on USDJPY and AUDJPY were like this. Now this one has made this one a regular flat and pushed higher. Okay, so you may get a corrective structure here in the lower degree and a push higher for one more, same as AUDJPY. Now, lastly on the yen pairs, CADJPY. CAD is strong. That's why USD CAD is coming down. So this one should continue to move to the upside. So here we made a push higher, we made a running flat. So this is a 1, this is a 2, we're looking for a 3 there. So that's why we're going to expect this to keep pushing higher. So CAD still strong, very clear. Now that's all the yen pairs. Let's look at silver and gold. Gold, simple continuation. Watch last week, we want this one to go and complete the triangle. So after the pulse here, we made this correction here. Last week said buy any corrective structure, any pullback. You're getting another one here, keep buying it. Okay, so simple gold. Gold and silver are very simple. It's just continuation to the upside. Now, let's just go quickly to the daily. Remind you, you can also get this in last week's video just to see what we are looking at here. We are looking for these to give us this. Let's see here. You've got this big move. There's a 1, 2, 3, 4, 5 move to the downside. You can. I'm not going to show this now. While it's a 1, 2, 3, 4, 5, you can look at it. You've got this pullback in 3 waves. You've got 1, 3 waves, 3 waves, 3 waves. This one is impulsive. So for a triangle, we can accept one impulsive move within the triangle. Only one. Once it becomes more than one, you disqualify that triangle. So far, this triangle is acceptable. Right, so you've got 1, 2, 3, 4. We still want to 5 before it goes and completes it. Let's see how that plays out. We'll see what happens at the top boundary. Okay, so that's what we're going to be looking at. We're looking for gold to come around this level. Silver, same continuation to the upside. Made 5 wave moves. Last week, I said it's going to push a little bit higher. We were here last week, said it's going to push a little bit higher. We've made 1, 2, 3, 4, 5. Now expect a deeper correction. Okay, simple. Right, that is silver. Now let's look at the pound pairs. We'll start with pound chief. Pound chief, same as pound US dollar. We are now looking for it to come and break the previous high here before we get any sort of reversal there. So we're busy with this corrective structure. Watch the corrective structure here on pound chief. Right, pound New Zealand. Now we have to talk a bit about pound New Zealand. Pound New Zealand, we wanted it to go to the blue box before the reversal. It looks like it reversed before the blue box. That's fine. So this was our projected blue box. Let's just show what we expect of the blue box. We expect it to reverse here. It does not matter if we don't get to the blue box. It's just that it's guaranteed trade when you get to the blue box, and it means you can get it right at the turning point. But there's 2 ways to take it, either in the blue box or after a pulse and a correction. Now, we did not get to the blue box, but we've got a pulsing move here. The expectation was for this, to do that, into the blue box and go all the way down. So that was the expectation. We did not get to the blue box. We missed it by this number of pips. That's okay. So now we've made this pulsing move here. Now, if this is all the move and we're ready to come down, you are going to get a corrective structure here. That corrective structure will confirm that now you're ready to come down, stop loss, and then you come down like that. You can only confirm that with a corrective structure. Okay, so that is your structure there. It is still within the structure. Okay, still within the structure. So if you don't get a corrective structure there, this is not complete. Let's switch off there. Now if we go to the lower degree here, 4 hour, let's see something here. This is New Zealand. So this has come down quite correctively. Looks like a WXYXZ. So this is a pulsing move. Let's see here if we can get something like that for the short term. Okay. If you get something like that and it does this, this can be your trade to the downside. So let's keep an eye and see what the structure builds here. That's pound New Zealand, pound Audi. Ali says it's going up because New Zealand is coming down. For now, yes. But remember, market correlation, we've got a special seminar on market correlation. It depends on the strength of the correlation of that specific time. Okay. So almost all pairs are correlated. It's the strength that is different. You can find the correlation between USDCAD and EUROCHF, but it may be a very weak correlation, maybe like 5%, 10%, which is insignificant. So you need to look at even the correlation between Euro US dollar and the DXY. You can find it at 95, 98%, but at some point it can vary and you find that it's at 70, 60, 80%. So it depends on the strength of the correlation during that specific period. Okay, so the correlation is not a blanket approach. There's no therefore. Okay, there's no therefore in inverted commas. So this is pound Audi. So pound Audi may have completed the move to the upside. Let's show why this could be complete. So pound Audi, we've made a passing move here. So remember the expectation was for pound Audi to go break this top here. So if it does not break, does not mean the structure has changed. It means it has simply made a move up, break lower, and it's now making a running flat and we're coming down here. So this would have been your running flat complete. Passing move, if we start getting a corrective structure here, that means pound Audi is complete and we're going to come down. Now look at the overall structure that we looked at the whole year. This whole corrective structure we looked at the whole year. And this is what it looks like. 3 waves up, correction. 3 waves up, correction. 1, 2, 3. Okay, so if you now go to the lower degree, it's 1, 2, 3. 1, 2, 3. 1, 2, 3. 1, 2, 3. 1, 2, 3. Can you see how snugly this fits in here? W, X, Y, X. Initially, this was our Z last year. We thought that we have located our Z here, but we were worried about this piece, and it made sense. Now we have located our Z here. Okay. Can this now be a 1, a 2, running flat there, goes and breaks the top as we've been expecting? That's what we also need to watch out for. Then it will be complete and we're ready for the big move to the downside. Okay, but for now, if we're not going to get this piece, one last high to break the top, that's also fine. All we're going to get is confirmation on this current move to the downside. We're going to get a corrective structure. A corrective structure may be the confirmation that we are done and we're ready to go. Okay. All right. That's pound Audi. Now, pound CAD. Amazing, amazing, amazing pound CAD. Watch last week's webinar, actually last couple of webinars. This complex structure, some just think I'm drawing lines, and some have been complaining that the degrees look funny. Now, if you want to see what wave analysis is, you need to watch how I looked at this structure for the last couple of weeks. Okay, so this looks complex. I spoke about this so many times. Watch here. We see a correction. You see, before I put in any lines, you don't see anything. Your blank, it looks complex. Now, as soon as I start putting my lines, I start identifying the structure, you start opening your eyes. Now we look at this as a 1, it's a 2, sorry. So 1, 2, 3, right? Now, it starts becoming clearer. Now, what do we have? You've got a passing move. This whole red correction is a move. And I said, this last week also, you're just going to break here and reverse. Look what happened. Look what happened. This is amazing. especially when when it's complex like this. This is what excites me, because I'm not going to get a lot of people having different opinions, because most people don't look at this. But when you see 1, 2, 3, 4, 5s on the euro pairs and the DXY and the S&P 500, a lot of people have got opinions on that. But when it becomes complex like this, you don't find anybody posting anything. Now, what are we looking for? We're looking for this to continue to the downside. Beautiful. Beautiful. Okay, that's what we were expecting. Corrective structure. That's what wave analysis is. If you want to know what wave analysis is, you must be able to identify structures like this. I get excited when I see it complex. When it's complicated and it gives me a headache, that's when I get excited. All right, so that's all the pound pairs. Now let's look at the euro pairs. We'll start with the euro pound. Euro pound. Euro pound. Doing what it's supposed to do. 1, 2, 3. Let me do it in single waves. Let's clear this. Pull back in 3 waves, pull back there, and I expected this one to go into the blue box. Okay, so we've been looking at this one coming down here. There's a likelihood that this one can still come down here, but that will depend on how the pound pairs are looking right now. Okay, so we need to see what we have here, because the structure here can also be, let's just switch off here. The structure here can also be a 1, 2, 3, a pullback there, and then you get another 1, 2, 3, making this a W, X, and then a Y structure similar to pound CAD. It can be a complete structure like this that simply looks like this. 1, 2, 3, and then it's done. Okay. So let's see here in the lower degree, in the 4-hour, it looks like we have got a pullback. So we may be retesting we may be going back for a pullback here. Let's see. And remove that. So we've made, let's see here. We made a pullback in 5 waves. Okay, so this may be the reversal. Let's see what we get here with this structure. We need to get a corrective structure here. If it's deep, then that means the pound pairs are now going to start coming down. Okay, let's keep an eye on it. It's not clear at the moment. We can clearly see the 5 waves up. So let's get the correction, then we'll see what we get. If we get a corrective structure, that means the pound pairs will also be ready to come down as we're expecting. Euro Audi. Euro Audi, what I showed you last week was this. Move, correction, move, correction. I said expect a Z. Go and watch. Now you've got the Z. This is what happened last week. W, X, Y. X, I said expect this Z. You've got the Z now. Okay, so now you've got a pullback, you've got a correction. Let's see what you get here. You could get at least a 3-wave pullback if this is incomplete. But this is what we looked at last week. Euro Audi, Euro New Zealand. Euro New Zealand also. 1, 2, 3 pull, 1, 2, 3 down, 1, 2, 3 up. We said we're gonna get a move to around this area. And then it looks like what you have on Euro Audi. So if you're gonna get any continuation to the upside here, you need to get a corrective structure. Okay, will be even clearer if it breaks out of this. Okay, but if you get a corrective structure here, even within the structure, you want to get involved. So keep an eye on it. All right, easy. Now, EURJPY, I said you are going to get an almost guaranteed trade here last week. I spent quite a bit of time on it because this is what you had. You had this pullback. I showed you this pullback last week. If you watched last week's video, I was screaming that you are going to get this trade. You just need to get a corrective structure here and you got the rally. Now, if you're not benefiting from this, I don't know how else you're going to benefit. Now, we are looking for this one to make a corrective structure here, even if it's sideways. It's a pullback impulse. It's another passing move to the upside. So there's a number of ways that this structure can play out here. So keep an eye and see how this is going to play out. But this was an amazing trade from here all the way up. EURCAD. Let's look at EURCAD now. EURCAD, this has been correcting here on some trend line. I'll show you the trend line that we've been talking about for the last couple of weeks in these webinars, that if it's broken, then this is gonna go. In any case, USDCAD is down, and all the pairs with the CAD as the quoted pair, we're expecting a move to the downside. If you remember, if you go watch last week, I said we are going to get a correction here on the line. If you get a corrective structure on the line, you're looking to drop. Now we have pushed lower there. If you want to get involved in any of the downside, you wait for these corrective structures in the lower degree to at least come down to this level. Easy. That's EURCAD. Now the cross pairs, let's look at this cross pairs, and I showed you that these have confirmed last week. Let's have a look at AUDCAD. AUDCAD, let's go 4 hour. So this one has made, let's show here, very clear structure. Even if this one of the cross of the pairs that we discussed last week that I said they've confirmed, this is the only one that did not go, and you understand because this one has got CAD as the quoted pair on it. But clearly here you've got one running flat 3. 1, 2, 3. You're expecting this one to make another 1, 2, 3, making this structure. Okay, so we still expecting downside on this. It does not even have to make a deeper correction. It can even just be an impulse. Then it will be an ABC regular flat before it pushes higher. Okay, then the rest was simple. If you look at AUDCHF, let's look at New Zealand CHF and AUDCHF. This one was here. Said it as confirmed, you're looking upside. Now you're still looking for this to continue to the upside a bit more. Trend is still up. AUDCHF, same. AUDCHF, push higher. AUDCHF was here last week. It has just broken here, so it continues into the upside. Now it has made 1, 2, 3, 4. This one can be a corrective structure here for the 5th. Okay, and that will complete 1, 2, 3. That's AUDCHF, CADCHF, same. CHF, right. This was here, pushed higher. 1, 2, 3. It has now made 5 waves. It went up in 5 waves. This is where we were last week. So expect a correction and then a push up. So you got this from last week. Right. All right. See, John has got a question. He's saying EURCAD down, EURAUD up. That's very possible. Very possible. Okay, AUDCAD up. That's very possible. It's all about, we've got a special seminar on correlation. It's part of the course. Right, so that is our CADCHF. And lastly, we can end with oil. I didn't do New Zealand CAD. Let's do New Zealand CAD. New Zealand CAD. Looks like here we've made a 3-wave move up with a running flat in the middle here. And now we're coming down here. So let's see if we get a corrective structure that will take us further down because of the CAD that is strong, looking to the downside. Audi New Zealand. Audi New Zealand. Audi New Zealand looks like it's almost ready. Somebody's commenting, yes. Now you can see Audi New Zealand is almost ready. Audi New Zealand, only one confirmation left. Guys in the group knows what I'm talking about. Only one confirmation left. Others have confirmed. Just one thing left for you to take the trade. All right, so watch here. A break above here. You're looking to take this up. Okay, you just need to be careful that this 1, 2, 3 is not a 3-wave pullback that's going to do that before it goes. So when you take a trade, you must always think about all the possibilities that can happen. All right, and lastly, if I didn't miss any pair, let's look at Brent crude. Brent crude, expect push higher because the CAD is pushing higher. So now we've made here 1, 2, 3, 1, 2, 3. Retesting the top here, there's a possibility for this to come down here and push higher. If it does not retest the low with this one high, it will just keep correcting here and keep pushing higher. That means this will be all the corrective structure. Okay, so let's keep an eye and see what happens. You cannot just jump in here at this impulse because anything can happen here. It can retest or it can correct here. So you wait for it to correct. If it's gonna retest here, you're gonna get another entry at the bottom. Even better risk to reward ratio. Okay, guys, that's all I had for you this week. Hope you make some money in the week. Structures are clear. Have a great week. Don't forget to hit that subscribe button and the like button on the video. Enjoy your week, guys. Cheers. Bye-bye. Please share the videos. You're more than welcome to share the videos with anybody who may be interested and who can get help from these videos. Cheers, guys. Bye-bye.